Whoopsie. Am I live now? Okay, so I forgot to press the live button on YouTube. I apologize. I was talking for what 8 minutes now, and I'm sorry. I apologize. So let's start over. Hey Foss, I'm sorry. I forgot to press the live button on the YouTube studio. So I started streaming, but I didn't go live on YouTube. That's why there was nothing coming out on the other side. Anyway. Oh boy. I'm just doing a recap of Friday on GBP USD. So let's start over again. So here's where our session starts. Gotta zoom out a little bit. Here we go. Okay. So we start out not taking the high, which is fine. We just set our alarms above the high of the Asian session and at the low of the Asian session, and then we just wait. So in this case, later on, we actually do breach the high right here. Yeah, I'm actually using GBP USD and Euro USD because my spreads on the indices are just way too high. And I was told it works on GBP USD and Euro USD. So I switched to those because my spreads are way better on those pairs. Now I'll get to that. I actually switched to a different system, but the system is still valid in the way I presented it. So I'm just going through a recap on Friday. So you see that there were trade setups and they actually worked out beautifully. So anyway, so we breached the high here. At the same time, we breached the TMA band, which I like to see. This is great. And we come out of the band. So now what we're waiting for is for an entry. And this needs to be white. So it's not here, but here. But apparently you can see that we already broke structure before this even turned white. And again, this stems from this indicator having a hard time with strong moves, quick strong moves. It just can't catch up. So if you see that as price goes up, you got to follow the structure. And I'm going to zoom in a little bit now. So you follow market structure. We create a high here. We create a low here. So we set a line on the low. They're fairly equal on top of it. And then we break the high again here on this level, on this candle. So now this low, higher low is confirmed. And then we wait. We create a high. We have several candles of pullback. And then we breach the high again. So in this moment when we breach this high, this becomes our higher low. The lowest point between this high and this high. Right here. And we're still waiting for this to turn white. We just follow along structure. So you need to do both at the same time. So you follow this indicator here and you follow structure, which is the ICT model. And then we go higher and then we make a strong move down, breaking the low, the higher low, showing us the intent to go lower now. That's a market structure shift while this is still green. So in this case, since this is still green, we're going to use the ICT entry model. So we look for our fair value gap or gaps in that strong move down. This is definitely displacement if you look at the size of the candle. So we have displacement. We have actually two fair value gaps in this one. So we have one here. And we do have a second one here. However, if you take a fib level from the high to low of the move that we have here, we can see that this is in a discount zone. We want to sell from a premium area. So this fair value gap is in premium, this one is in discount. So we invalidate this one here, and we concentrate on this fair value gap up here. And in this case, even though the fair value gap goes a little bit lower than discount, I would set my order right on the equilibrium, which is the 50% level of the fib, because we are selling from discount. So right on that line, or above, little above, whatever you want to do. And then my stop loss goes above the first candle of the fair value gap candle formation, which is here. So that's where my stop loss goes, right above the high. And I set a pending order. And this is another thing that is new. Hold on, let me bring this tool back. Take profit times 3. There we go. So when we set the pending order, we get our 1, 2, 3 target here through the tool that I'm using, and we have to make sure that this 1, 2, 3 target, or the take profit target 1, is below we reach the low of the Asian session, because that's our TP2 basically. So when I take a trade, I want to make sure that my 1, 2, 3 risk reward take profit 1 is before we hit the low of the Asian box. In this case, this is valid. We're right actually above the middle of the Asian box, so we can take this trade. So we set a pending order, and let me remove, no, not remove, but let me zoom in again. So we set this order as soon as this breaks, and we get tagged in right here, and then it's a waiting game, plays around for a while, then it starts moving down, oh, and it hits 1, 2, 3 right here, actually here. As soon as we hit 1, 2, 3, we set our stop loss to break even, and then we wait for the breach of the Asian session low, which I'm going to mark out right here. This is our low. Let's zoom in again. And this happens right here, and we do not take profit here. We wait for those two to turn white, which happens right around here, and that's where we take profit too. So instead of taking the profit here, we get out of the trade right around here somewhere, either on this candle or on this candle. So we have those two turn white, we're out, and that's it. So on Friday you would have had a nice setup here on GBP USD. Like I said, the little change that I mentioned in the chat is that, let me just get rid of those lines, that when we actually have a setup forming, which means we breach either the high or the low of the Asian session, not only do we pay attention to this bottom indicator to turn white, because this can be false sometimes because of a strong move like here. So we also concentrate on market structure, and we have to follow market structure. And if we do get the market structure shift with displacement before this one turns white, well, then we take the ICT entry model, which in this case would be this extreme fair value gap on the top, pending order here in discount, in premium. Because I take a fib level, measure this leg, take the 50%. This is how you validate a fair value gap. If it's in discount and you want to sell, this is not valid. You want to sell from premium. So in this case, this would be the top fair value gap. And since this was slightly out of discount, we set our pending order exactly at the 50% mark. It would be a little bit higher than the low of the fair value gap, and that's where the pending order sits. And then we just make sure that 1, 2, 3 is before we hit the Asian session low, which in this case we had. And yes, it does play around for a good 2 hours before it actually starts moving, but that's the market. There's nothing you can do. You set the order, set and forget. The first time we actually manage to trade is when we hit our first profit target. Before that, we don't touch anything. That's it. Take your 2.5% risk trade. trades here. Close the first one at 123, and that moment we set the second half to break even, and then we just wait until we hit Asian session low, which we do in this case, and from that moment on we follow those two bottom indicators. When they start turning white, we exit. Simple. I hope that makes sense. Like I said, I noticed last week that this indicator, like I said, when we have a strong move, which is usually the case when we go into the London session, this indicator just can't keep up. So I'm incorporating ICT's full entry model here as well, and whatever we get first, we can take. Now if this turns white first before we get a market structure shift and then we get a valid entry signal, we can take this as well. Let's say, for example, here, I mean, not that we would take this trade, but right here we get actually a valid setup, probably on this candle here, even though we haven't even had the market structure shift at this point. Now here's the market structure shift actually, and you can see it doesn't even come back to the extreme. It only goes back to this fair value gap here. So we would have had a way better entry in this case. But like I said, for those cases where something like this happens, where we get an ICT entry before we get the indicators actually telling us to get ready to enter trade, then we take the ICT entry. Simple as that. As long as we have a valid market structure shift, we can do that. That's what ICT actually teaches. Yeah, and that's pretty much it. So this would be 1 to 3, and I think it was a 1 to 9 on the second half. So that would be 1.5% and 3%, 4.5%. So it would be a 5% day. I didn't trade Friday. I was working on something else. I actually started a challenge for a 10k account on my fund at FX, and I put the EA on it on minimum risk. It's not the updated version yet, it's still the old one, but I put it on minimum risk so they can actually start to accumulate some profits. This is a no time limit challenge, so I figured, at least get it started. It hasn't closed any trades yet. I just started it on Friday, and this is trading on a 15-minute chart. But I just wanted to do this recap so you can see that we actually had a very nice setup on Friday on GBP USD. And then when we look into the London session, yeah, we had a setup here. Again, indicators are white. We get green here. We have our arrows in place, so we can take this trade. Stop loss here, and then after we breach the 15-minute band on the other side, we need to be prepared to exit, which in this case, this turns white again, and then here's the exit signal, and we can actually take this short again, going lower. So he had two nice setups in the New York session as well. I personally would have called it a day here. That's enough. That is the FEG is drawn by me. I don't use the indicator anymore because it's not very accurate. Sometimes it misses FEGs. For me, it's easier to just manually draw them. But again, if you need help with FEGs, or if you need help with the ICT entry models, the judo swing, liquidity sweeps and entry, there's dozens, hundreds of videos out there. But to make it real quick, an FEG is always consists of 3 candles. So when we have a market structure shift, which we happen when we breach this low here, because this was the last valid higher low, we breach it, we close underneath it, so that's a valid market structure shift, And not only do we break it, but we also have displacement here. We have strong 4 candles in a row. This is displacement for me, meaning a strong move, very obvious. If you compare it to the rest of the chart, this is a very obvious move, and it breaks it shifts market structure at the same time. So this would be a valid leg to look for entries going the other way. And FEG, like I said, consists of 3 candles. We have 1 candle here, 2, 3, and we're looking for a gap in between candle 1 and candle 3. So that gap would be right from this wick of candle 1 to this wick of candle 3. This would be our fair value gap. In this area here, this is what ICT teaches. There was nothing but selling going on. This is an imbalance in the market. So in order for be fair value gap, hence the name, to be fair to every market participant, price needs to come back and tap into this area to give other people a chance to get in as well, basically. And this is what it's based on. And it's always a 3 candle formation. Candle 1, candle 2 with the actual gap, candle 3, and a break of structure in the same move. And then when we start retracing, all you have to do is, because we have another fair value gap here, if you look from this wick to this wick, it expands actually over 2 candles because there's no wick on those 2 candles. So this is one big fair value gap. So we have a second one. Well, which one do you choose? Well, we were told that you only sell in premium and you only buy in discount. So you put a fib on that leg all the way down to the low. This, we don't see the rest yet. We only see this, and we see a retracement starting. Technically, you could, when this spikes down here, because we haven't entered any premium at this point. Premium is above 50% of the leg. So that disqualifies this fair value gap, because this one is in discount. We don't sell from discount, we only sell from premium. So that tells you that this second fair value gap you can disregard. So this is not valid because this is in a discount area. We want to sell from premium. Premium is here, is up here. So this makes this the only fair value gap that I see here. And then in this case, like I said, you set your order, pending order, right above that wick where the fair value gap starts, and your stop loss goes above the first candle of the 3 candle formation, which is this candle. So your stop loss goes right above this candle here. Because if we're correct, price doesn't come back here at all. And yes, it plays around for 2 hours or so, but it doesn't come back. So you get your entry here, and then your 1 to 3 risk reward is, I think it was somewhere around here, just at this low. All you have to do is, when you set the pending order, is to make sure that your first profit target is above the Asian low, because that's our TP2. If you get a profit target 1 to 3 that is outside of the Asian session, I would not take the trade, period. Wait for a better entry, possibly. That gives you a better risk reward. So anyway, in this case it was valid. So you get your entry, 1 to 3 exit, put your stop loss to break even, and then we wait until we breach the Asian session low, which is right around here. And as soon as we breach it, we don't exit, we at least look at the second indicator here and wait for it to turn white, which happens right around here. And that's where we exit. So we get a little piece more out of this. And in this case, like I said, you would have had 1.5% on the first half, and 1 to 9 on the second half, which makes it 4.5%. So actually that would be a 6% day in this case. So, and like I said, what I wanted to point out is the change of, do not only pay attention to this third indicator here, down here, because sometimes it doesn't catch up in time. As you can see, the high entry would have been up here, but at this point this was still green. So even though this was the highest entry, this indicator didn't catch up at that point. So what you need to do is, or what the change is from now on, to not only pay attention to that bottom indicator, but also pay attention to market structure as ICT teaches it. And let me go over this again. We breached the high, we also breached the TMA. It's all good signs. That means, okay, now we're definitely looking for a sell. And then we follow market structure. We create a high here, and then a pullback is for me anything that has at least 3 candles without breaking the high. So 1, 2, 3 did not break the high, so we're in a pullback. So we wait, and 4, 5, 6, 7, 8. The 9th candle finally breaks that high. So this is a valid pullback for me, right here. It breaks this high, and then we look from the last high to where it breaks structure. Where's the lowest point? Well, the lowest point is here. So this is our now confirmed lower high. As long as it doesn't break structure, this is not confirmed. So keep that in mind. The lower high gets confirmed once we break structure to the upside. This is very important. A lot of people make that mistake and take this as a lower high, even though we do not break structure to the upside. So before this candle, our last low was actually down here. It's just a different arrow, but the arrows really don't matter. I'm actually only paying attention to the yellow arrow. And this is just a fractal high that was on the old template as well. And we still have our small red and green arrow, but I'm not using those anymore either. It's just about the yellow arrow in confirmation with the bottom indicators, and or, like I said, ICT entry model, which consists about breaking the high in this case. Then we follow market structure. Like I said, this is now our low because this high gets broken, and this was the lowest point in between. And then we wait, and then we have this high here, and then 1, 2, 3 candles. So that confirms for me that we're in a pullback phase now. So this confirms this higher high, and then we wait. Does this get broken first, or does this get broken first? Simple as that. And in this case, the high gets broken again. We don't even come close to the low. So when we break the high here, which is it has to be a candle close, which it is in this case. Then we look between the new high and the old high, between those candles, to find the lowest point. And in this case, the lowest point is right here. So when we break this high with this candle, this becomes our higher low, confirmed higher low. Very important. And then we get the move down, displacement, and we finally break the low here. So when this happens, as soon as this candle closes here, now you're looking for a fair value gap for entry, which is right here. And if you don't get one, well, then you don't have an entry. Simple as that. That usually means the price actually goes higher, because if you have very efficient price delivery, that is usually an indication that we're still going higher. So if you don't have a fair value gap, you do not enter, even if you break the low. Simple as that. So we mark out our fair value gap right here, and then as soon as we get indications of a pullback, 1, 2, 3 candles that don't break the low, now we're in a pullback phase, from how I understand it. Then we take a fib, because we have 2 fair value gaps. So we take a fib from the high to the low, which in this case is here, and we can see that the second fair value gap, which is down here, is below the 50%. So this is in a discount level. So that invalidates the second fair value gap and only leaves the first fair value gap, which is the so-called extreme fair value gap in this case. So we're concentrating on this one. So in this case, like I said, as soon as this is confirmed, I set a pending order right here. So we're on this candle down here right now. In this moment, I set my pending order right here, with my stop loss right above the first candle of the 3 candle formation, which is here, so not above the high, above the first candle of the formation, which is right here. This is where my stop loss is, and this is where my pending order sits, right above that, right at the low of the fair value gap basically. And then once I set the pending order, all I have to do is make sure that my 1, 2, 3 risk reward is before the low of the Asian session. Yeah. So when I set this order and I get my 1, 2, 3, which happens to be down here, that would be a valid trade for me because my Asian session low is down here. So my 1, 2, 3 target is before we actually hit the low of the Asian session. 1158 would have given a non-entry as well or not? 1158. Let me see where 1158 is. This is down here. Do you mean time 1158? I'm not quite sure. This is 1158, so that's on this candle here. And oh, it's because of the stupid reactions. Can you type something else in the chat so I can actually read your comment? Oh, let me do that. I can do that too. There you go. Oh, non-ICT entry 1158. Okay, do you mean chart time or do you mean EST? So 1158 would have been right around here somewhere, because this is 10 to 11, and then it would be somewhere around here. I'm not sure. Yeah, that's always, you always gotta talk to me in Eastern Standard Time. Anything else doesn't make sense because every broker has different times. So there's no, that's why I said please check the boxes and make sure that they're actually in the time where they're supposed to be. Even though that's an automatic indicator, you gotta make sure that it actually shows you the right boxes and at the right time, which is, you know, Asian session from, I think it's 8 o'clock. I just set it at midnight. But this is, technically you should set this at 8 o'clock, which right now is set at 6 p.m. Eastern Standard Time here. So I probably have to move that up 2 hours. And then between 8 p.m. and 2 a.m. is the Asian session. And then 2 a.m. to 7 a.m. is the London session. And then 7, and then we have the third box. Obviously after London is New York. And then we also have the box for the silver bullet hour. So if you point me to where on the chart a non-ICT entry photo, okay. Here. Oh, okay. I see what you see. I saw the picture. So Foss is referring to this entry here. Let me remove those lines because it's just getting too much. I'm also gonna get rid of some indicators here. So let me get rid of the fractals. Let me get rid of this one here. It's just too much noise on here. We also don't need this one anymore. Okay, that looks a lot cleaner. So let me zoom in here. So yeah, I saw it. So the non-ICT entry that would have been valid would have been here, because this is the first time that we get a red bar where this is already red and this is finally white. On the first bar here, we're still green down here. On the first bar here, we're still green down here. On the first bar here, we're actually red and white. So this would be the first entry that would consist of my system, the way I entered before. But then you also have your stop loss all the way up here. It has to be above the high. Now, if you do get dots here, you are welcome to take this as well, because we're still in a sell zone, which is up above the TMA, which is valid. And we have a confirmation here as well, because we are red and red. So you're welcome to take this as well. You know, if it gives you a better entry. And here you actually get a tighter stop loss, because now you can set your stop loss above here. But technically the correct entry with that system would be on this candle here, probably this candle here, with the stop loss up here, which is humongous. So with the ICT model, you're already in the trade here, with a way better stop loss being up here, if that makes sense. But again, if you do miss that entry and you're not sure, and you get dots, and you see red, 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 by all means you can take this as well. And now, since we do have a resistance up here, we can set the stop loss right above, which is way tighter, and you're welcome to take this as well. And at this point, you could, if you entered here before, you could even move your stop loss down here now from the first trade. But this is definitely a way better stop loss, and then off you go. So yes, you can take that. That is above the TMA. We do get support dots. We already switched here, going down, so you already know you're going the right way. And then you get confirmation here, you know, on this one, the second bar, which is exactly where the arrow is. Again, this switches 2 bars at a time, usually. So that is probably where this first indicator switched red. And then you look down, red, red, you're good to go. You enter, put your stop loss above here, and you already know the target is always the other side of the TMA, so your minimum exit would be down here. But again, split it in half, 1, 2, 3, take 1, 2, 3, and then set your stop loss to break even for the second half. Always do that, because you want to lock in some profits in case something doesn't work out. You still have enough to go for a really nice second half, 1 to 10 probably in this case, or even more. Let's see. So if you enter on this candle, or let's say even on this candle, to be safe, so that's 6.1 pips, and then the minimum target is down here, that's 36 pips. So 6 and 36, that's a 1 to 7 on the second half, which is 3.5%. You're talking EST, right? Because EST, we're still on the London session. This is 7 a.m. my time. So 11 on my chart is 7 a.m. on my chart. So if I go back here, that's 5:58 in the morning, 5:58 a.m. on my chart. I know this is all confusing with the different times, but like I said, every broker has a different time. So you cannot refer the broker time to someone and say, oh, on broker time such and such there was an entry, because every broker is different. Yeah. So just keep in mind that the Asian box goes until 2 a.m. and then the London box goes until 7 a.m. So if it's before 7 a.m., that's roughly around 5 a.m. at this point. And this is 10 a.m. to 11 a.m. So let me go over this again. You gotta make sure that your boxes are correct. Actually, let me correct this Asian box, because that's not right. I just noticed that. So this needs to be -2 on mine, because for some reason my No, we don't have an Asian box anymore. Great. For some reason on my broker, the period separator, which is usually separated between one day to another, is actually at 6 p.m. where the actual days end and going into the new day is here. And you can see it's very obvious because that's usually when the spread widens. So I don't know why this broker actually has 6 p.m. as a period separator, because technically it should be here. Don't ask me. Maybe they have different time right now or whatever. So you can't always go by what the broker shows you. Never. Times are different. Obviously, daybreak is different, or switch to the new day is different. Because I know for a fact it's actually at 5 p.m. EST, and this is 6 p.m. EST on my broker. So I no idea. It's always trust your own time, or concentrate on New York time, which is EST, if you refer to time, because that's what everybody should use as trading time, independently from the brokers. So anyway, that was just a recap of Friday. And yes, there were some possibilities here. You could have taken this one. You could have taken this one through silver bullet hour, whatnot. There was actually a silver bullet set up here as well, because we have a fair value gap here, which I don't think it made it all the way. But you would have been in a trade up here way before silver bullet hour. You could have taken this one. We're out of the band. We get a signal. We get confirmation down here. Even if you take it here, set your stop loss here, you could have taken this all the way down to here. So that's a nice trade. Or if you follow the indicator somewhere around here, would have been the exit. And you can see, if you look at the risk to reward, this was a really nice trade as well. Same with this one, entry around here, and then you wait for up here. This would be your exit. So 7 to 28 pips is a 1 to 4. And here we had, let's say if you go in here, 6.4 pips to, let's say, 56. That's also a really nice risk reward trade. But honestly, if I trade, my main session is the London session. We did have a successful trade here that netted 6% on the account. I'm good, I'm done, I'm walking away. Like I said, I did not trade this because I set up my challenge account on Friday, and I'm actually trading my 15-minute strategy, which is very similar to this one. Let me see. M15. Is it this? No, that's not the right one. What did I name that? Let's see, so probably. Yeah, that looks like it's an M15. Let me just adjust it real quick. M15, so we use the 4 hours here. There you go, and then all those are different times as well. This is week. This is day. It's basically the same principle. It's just on a higher time frame, and this would be 4 hours. So, but I'm also concentrating on London session for entries and exits, as well as New York. As you can see, the high or low of the day is always either in the London session or New York session for turnarounds. And I trade this a little bit differently. Let me just show you. This is the trade I'm currently in. So I disregard this bottom indicator in this case. So this was the first entry. There's no stop loss. Then we go down, we get a second entry down here. No stop loss. And we go up and we go lower. And we get another entry right here. So that's where I'm at right now. So I have 3 positions with 0.02. Again, this is a demo account, and I already brought the account up to 5 or 7 with this method, by the way. And then when price starts moving up above the top of the band, I close all the positions that are higher priced at the middle line. So I can't do this right now because the market is closed, but I would set my profit target for this here, and then this second one also here, and then I would take the third position up above the band for a reversed entry. That would be my exit for the last position. And since I'm keeping my entries low in lot size, like I said, I have a total of 0.06 lots right now, and you can see my drawdown is 791 at the moment. Excuse me. It's not very dangerous to the account to do that, as long as you take entries at a good entry point. Let me put it that way. You know, if you just wildly place, I call them recovery trades, whenever you feel like it, that's not a good idea. I also have to change this indicator here. In this case, this is a 4 hour. So again, we had a yellow and green arrow here. I actually took it earlier because I knew after this move that this is not valid. So I just went by those two, and that was my first entry here. We went higher, then we broke down again, and I took the entry after I saw this pin bar, I guess you call it. So I took the second entry here, and it did go up a little bit, and then it came down again, and this time I waited until I had confirmation here, and this was actually white at this point, so I took it. Now it's red again because it printed back one bar. This is moved lower, but that was my third entry. So I'm not just taking random entries. I wait until I get something that makes sense, and then I just add a position. Like I said, I'm at 0.02, 3 positions, and then I wait until price moves up again, and as it moves up, I close all the higher priced positions here at the middle line, and for the last position I wait until it breaches the upper band, turns around, gives me an entry signal, and then I close the position. So that's what I'm trading right now, and this actually it's slower paced because it's on a 15-minute chart, but I found these indicators to be more accurate and less noisy on the higher time frame chart, which is the 15-minute, and this is basically what my EA is based on as well. And this was a period that I actually did trade, and this was pretty annoying. Again, we had a strong move up, so I did actually jump in on this one. Went higher. I added an order here. I went higher. There was no way for higher. If I enter an additional order or trade, then it has to be, in this case, if I sell, it has to be higher than my last one. Here I didn't get that opportunity, but here I did, so I took another one. So I was 3 positions in, and then I went higher again on Friday, and I took another one up here. So now I was 4 positions deep, and then price finally started to melt down. I closed those 3 positions here at the middle line, and the last position I closed when I opened up a buy here. So that's where I closed the last one, and that allowed me to go back into profit. Actually, I'm now at 507.65, and if you remember correctly, I was actually down to 485 last week, so I made up that loss and then some, and now I'm rinsing and repeating the other way around. Now you can take the green arrow as a confirmation. However, I found out that this also repaints, but only if you switch time frames once. So here, for example, we had a green arrow here. That's why I entered. And then as price goes down, we had another green arrow here. This was still on the chart. This was on the chart too, but once I switched time frames and went back, now the green arrow here is gone. So you gotta before you take the trade, and that's easier to do on the 15-minute chart because you got time. I mean, each candle is 15 minutes after all. Go back once on a time frame, or up one time frame and go back and make sure that that arrow is still there. But anyway, yeah. Yeah, because I was already 3 orders in, I was like, okay, this time I wait until I have a valid setup according to my strategy. And that was up here, I think. Yeah, and it's still going lower, but we see what happens next week or this week. So this is what I'm trading right now. Like I said, this is way slower paced because it's 15 minute, but it also works better in my opinion than it works on a 1 minute chart. And again, this is what my EA is actually based on. So now I have an idea what it does. And you can see it moves in between bands here. This was nasty because you would have had an entry right here. But then it goes lower. And you have to wait until it reaches the band again, which it does here. So you get a second entry. So now your average price is right here, which doesn't leave much room until it actually hits the middle line. It's only 18 pips, but still it's profit. And then the second one goes all the way up here, or here actually. No, actually here. And you can see on this template I also keep the boxes on because I know that the reversals are either in the London session or in the New York session, and they're always here. Highest point New York, highest point London session, highest point New York. And I'm just looking at outside of the band. Highest point New York, lowest point New York. Here again, London session. Since it didn't breach the Asian session low, I probably would have not taken this trade because I know it goes lower, because the low is never in the Asian session. And then sure enough, in the New York session we actually come lower. So there was the entry. And it just went up from there. Same here, London session high. Again, London session high, just a fake move and then going down. So for me, this is easier to trade in my opinion, and it's way slower paced, and I'm okay with that. And again, this is just a demo account. I'm just playing around with it. But if I have the chance, I will trade that 1 minute setup and Judas swing on the 1 minute, just the way I explained it to you, and it does work. So you just have to, again, incorporate that little change, that small change of when the bottom indicator does not catch up in time, which usually happens when you have a strong move. Again, keep that in mind. You see a strong move, do not just rely on the bottom indicators. Also rely on market structure shift, displacement, and fair value gap. So if you get a fair value gap entry before you get an indicator entry, well then take the fair value gap entry, the ICT model entry. Of course. But it works. And you can see on all those days, when we go below the Asian session, well, then we get a move to the upside. Here again, we go below the Asian session, move to the upside. Here we go shortly below, then go up, and then come down again. That was a news day, I would imagine. And then Friday again, we go above the Asian session. There's your entry. Now if you combine this with a 15-minute time frame, well, you could see if your entry is up here and your stop loss is here and you take it all the way down, you're looking at ridiculous risk rewards. You can do this as well. That's up to you if you have the I don't want to say it on YouTube, the gut to actually sit through it. And I don't think that would be actually advisable on a challenge account, because your risk is so small that even a small swing can, in that case, be like 5% or more, and you only have a 5% drawdown. So, and most take it from the highest equity point, most prop firms. So you would actually fail the challenge because at one point you were 5% down from where you were at the highest point. So you can do that on a private account because you don't have any restrictions there, but not necessarily on a challenge account. You always got to keep your limits in mind. So if I go back to the 1 minute, this was Euro USD. That was actually beautiful, almost. So on Euro USD we went right above the Asian session when our session started. So we breached the high. And let's go through this as well so you see how it works. Let's go through this Euro USD setup on Friday. So here's the Asian high. We breached it right on the second candle of the session, which is great. So now we'll look where's the last low, which in this case is actually here. Actually no, it is up here because we have 3 candles or more before we breach the high, so that's a valid low for me. That's how I measure. There's people that use fractals. I don't like it. I want to have a fixed mechanical rule that we can't mess up, and for me that is 3 candles or more before we breach the high again. That's a valid pullback for me. So we do get this in this case. We have 1 candle lower, 2 candle lower, 3 candle lower, and then we go above the high. Still don't break it. We break it on the 5th candle actually. So this becomes now a valid lower high for me because we just broke the high, higher low, I'm sorry. And then we wait, and it goes higher, 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 and then we have 1 candle, 2, 3 candle that do not break the high anymore. So this is a pullback phase for me. That's a valid pullback, and it comes lower. Does not break the high. Actually it does by a wick, but that's not valid for me, so I wait. So this is not a valid higher low, as you can see, because we did not close above that price. We just wicked. So this is not a higher low for me. We're still on this higher low. This needs to get broken before I'm interested. And then we actually go down and break it, and you can see again the candles are a lot bigger than before. And we do have a fair value gap up here, which we never go back to. Wow, look at that. Where did I see that trade? I don't know. Oh, that was actually an entry with my model right here, because this actually was already white, and then this turned white, and then here's the last confirmation red bar here. So this would be my entry. So this was my, and we did not get a pullback into the fair value gap, extreme fair value gap, as you can see here. But in this case we actually got an entry with my strategy first before we even broke structure. So we were directly at the high. So the entry would have been on this candle here, on this candle. We got red bar, red, white, or this was maybe white at that point, but this was a valid entry. Stop loss goes right above the highest point, which was here, and then 1, 2, 3 was, I think, somewhere here, somewhere around this area. So when we hit 1, 2, 3, again we set the stop loss to break even. And where's our target? Well, Asian session low. We have break even. It comes back, almost stops us out, but it keeps going down, and we never reached the Asian low. But you can see here that this flips, this flips. So I probably would have closed the second half somewhere around here. I do not take the trade up, so I wait, and then we breach the high again. So again we wait, and then we have, this is not valid. This would be a valid entry on my strategy, right on this candle here. So in this case above the high, which gives us a 1.6 pip stop loss, which is great. but then we also have an ICT entry because we finally break structure here with this move, with this placement. This was not a fair value gap. See again, here's not a fair value gap. There's no fair value gap, so you wouldn't have had a ICT entry on this case, in this case. So again, this is where my strategy comes in. Gives you a better entry, and you do not get an ICT entry here because you don't have a fair value gap. Those 2 wicks overlap, so there's no gap. Here, no, they overlap as well, so there's no gap between those three. There's no gap, no gap, so there's no fair value gap in this case. So you're actually better off using this system. And the way I use it is very simple. You can actually ignore the arrows up here. You can just look down here. Whenever you get a red bar, you just look down, and if one of those two is still green, you leave it alone. And then you wait for them turning green again, and then wait for the next red bar. That's how I do it. So first one was here, green, green, not interested. Okay, you wait for it to turn green again, which it does here. Now you wait for the next red bar, here, here. And in this case, this was not white yet, guarantee you. Because that always takes a while to catch up. So this would have not been a valid entry in this case, because I can guarantee that this was still green. So you leave it alone, you wait for green again, it turns green, and you get the next red bar, which is here. And now we are white, white. And this actually crossed over already, and this crossed over already. So yeah, now I'm taking a trade, which is right here on this candle. It might have been this candle, to be fair. And you put your stop loss up here, and then off you go. And this time we actually reached the Asian session low, which was right here. Let me just put this on real quick. As you can see, we hit it, and now you can follow the bottom indicators for the exit. And even if you exit here, that would have been that's where I would have exited. That's fine. So it would have been a very successful day on Euro USD as well. Like I said, we would have had a 1 to 3 on 0.5%, and then I don't know. Let me see here. Show lines. Pending. Go down here. So stop loss was up here. Here. Entry would have been on this candle here. Oh, good guess with my 1, 2, 3. Anyway, so this would have been the first trade, 1, 2, 3. Stop loss to break even. We hit that, and then when you go, we go down, and we do not hit the Asian session low. Almost, but we don't hit it. However, we do switch and then turn white here as well, which probably happened on one of these candles. So the second half I would have closed out probably here on this candle, or maybe after the strong up candle, because now we're switching directions again. So let's move it up here. That's fine. So that would have been 13.2 pips, and the stop loss was 1.2. 1.2. So that would have been a 1 to 11 on the second half. So that right there, I probably would have called it a day. That's 1.5%, and then 11 on 0.5%. That's 5.5%, 1.5. So that's 7%. Just those two trades, you can call it a day. 7% on the account. That's great. So on Euro USD, also beautiful setup, a beautiful day. The day before was nasty, I can tell you that, but that was because we had news and I didn't look. And you can see what happened here. I actually did trade this, And after the second stop out, I was like, okay, I'm out. And then I realized that there's actually news going on. So that was my mistake. Didn't pay attention to the news. But yeah, on Friday, beautiful setup here. And then, like I said, even if you get out here, you still end up making 7% in total. And then, like I said, it breaches again during the London session. You could have taken this as well, and this was also a monster trade. But I probably would have called it a day right here. So that's, what is that? 130 minutes into it, so a little bit over 2 hours, and you have 7% in your pocket. You can leave. That's good enough. And trust me, 7% in 2 hours, that's pretty good. Can't complain about that. Yeah, anyway, like I said, both GBP USD and Euro USD gave you really nice setups on Friday. Now those dots are still adjusted to the 4 hours. So I guarantee you had dots up here. So in this case, the 4 hour, those are 4 hour fractals, are the lowest ones. Let me switch this back to 15 minute. I can guarantee you there were dots. Yeah, there were dots right here. So that would have been a valid setup. Price comes out. You get a red bar, which is already white. So you could have entered right on this candle, stop loss above the dots, and then off you go. We said 3 to 1 right here, and then a 1 to 11 right there. That's good enough. You don't need more than that. And always pay attention, like when price comes down and you see white dots, make sure that they're fresh dots like here, and don't go back all the way to here, because if they're here, those are the 15-minute dots from that time. As soon as you get this, those are not valid anymore, even though they print. You can ignore that. So don't get confused. That's important. Unfortunately, that indicator does it. Like this example here, price comes up here and you see white dots. Well, those are those white dots from before. They're not fresh white dots. Those are fresh white dots. So don't get confused. Yeah, because I just see that here. But yeah, so we had beautiful trade on Euro USD on Friday, and beautiful trade on GBP USD as well. So that was 7%. GBP USD, I forgot, was like 6%, I think. So yeah, that would be 13% between those two on Friday. It's crazy. Both very clean setups. Nothing to think too hard about it. Previous day, different story, but again, that was news, and I forgot to look, because we came up here. Okay, then we broke up. Low was here. Yeah, you can see here we did actually break structure. We had a market structure shift here, but then price went higher because of the news, and I got stopped out on my fair value gap here, and I was like, okay, I'm done, because I saw all those wicks and going up and down. I was like, yeah, I don't want to be in this market today. So I think I had one loss here, and then I call it a day. Later on we did get a setup here, but I was already tired, and anywho, on this day, yeah, that was a nice setup right here. There was a setup here somewhere. We did get a 1 to 3, got stopped out. Wait, and then we had an entry here. 1 to 3, got stopped out again, entry here, and then we finally moved up. So that was actually a pretty good day as well. Yeah, so like I said, the small change I mentioned earlier in the chat is do not just pay attention to the bottom indicators, because again, Sometimes strong move, they don't catch up in time. Also pay attention to market structure. Even though, again, here's the extreme fair value gap. Let me zoom in again so you can see that why I have my entry model. So we do break structure here. We go below this high, which was a... Oh no, here. We go below this high. Higher low, I'm sorry. Higher low gets broken here. We do have a fair value gap here at the extreme. And we do have a second one here. And again, from what I told you before, you take a measurement from the high to the low of the leg, and you can see that well, this second fair value gap was actually at, you could have taken that. It was actually half in the discount, half in the premium zone. So in this case, yeah, this would have been a valid entry. So you put your entry right at the 50% because that fair value gap is in both areas. But we only sell from premium, so we would just set a pending order here, and then the stop loss above this high, because we have another fair value gap that we have to cover. So in this case, the stop loss would have been above the high. So actually, yes, this would have been a good entry on ICT as well. But again, our entry came actually before we even broke market, before we had the market structure shift. We did get the entry here, and this was valid. So you could have entered here with my model, a stop loss above here, which would have given you a little bit of a better entry, and yeah, would have worked out beautifully as well. So that's that. Like I said, a couple of recaps from last week. Again, I'm trading my 15-minute my 15-minute strategy. That's how I caught up the account to 507, and that works differently. Like I said, there's no stop loss involved, but also smart buying of recovery trades. So I'm not just randomly adding to the position. I wait until I get valid entry signals before I add a position. And that's what I'm doing right now, and that's why I have 3 orders here. And again, with this method, whenever price does go in my favor, which is above the band up here, I close every higher position at the middle band, or if I sell every lower position on the middle band, and just take one position to the other side. Simple as that. Because sometimes it doesn't reach the other side of the band, and then comes down again and goes even lower. And if it does that, you want to be out of all the positions except one. That's very important. So you're not building up position after position after position after position, and your drawdown just increases. You don't want to do that. So you want to get rid of the additional positions as soon as possible. And usually it always reaches at least the middle of the band. So that's where I close those not good entries. That's where I get rid of them. Same as here, I had 4 entries here. So the best one, the highest one I kept, and the other 3 I just closed at the middle line, period. No regrets. And then I followed the last one down to here and closed it there. That's what I'm doing right now, and again, this enabled me to bring the account back to 507, and that's why I'm with a demo account. I keep doing this, and this is also what my EA is based on. There are other things in EA that are a little bit more finicky, which would be hard to do manually. But that's what an EA is for. It's a robot. It can do things a lot faster and 24/7 compared to a human. So it works a little different from this approach, but the basics are the same. And we're actually doing an update right now, so there's a new version coming out, which makes it hopefully even more profitable. What are you thinking with the EA? I don't understand what you mean. Well, I mentioned that before. I know I talk about the EA, but this is more related to my journey again, this EA will not go out. I will not give that away. I will not sell that. It will stay within my house. So, and I know this sounds selfish, but there's a really valid reason for it, and the reason for that, I mentioned that before. When I did have my funded accounts, no, again, this EA stays in-house. It will not go out anywhere, will not be sold anywhere, nothing. I'm the only one that will use that EA, period. And again, let me explain the reason, because I know it sounds selfish and I'm all about helping people. However, I had funded accounts. I was 150,000 in funding, and then I had a bad period with my strategy. So I was like, all right, I need to take a break before I lose the accounts. And in the meantime, I'm just gonna throw an EA on the account, so at least it's traded, and even if it's just minimum profits, it will slowly dig me out of the hole. So that was my thinking. So I found an EA that was really good in the back tests and also had good reviews, and I threw it on the funded accounts. And then not even a week later, I got an email from the prop firm that I had the funded accounts with, which was my Forex fund, so those accounts would have been gone anyway now. But I got an email from my Forex fund saying that I'm copying trades, that another account with my Forex funds has the exact same trades, and therefore both of our accounts are cancelled, closed. So I lost the funded accounts because somebody else was using the same EA. And that's what they mean with copy trading. So even though I didn't copy from anyone, I was just using an EA, because of the fact that somebody else was using that same EA, our trades were the same, obviously, because it's the same strategy, same software, same entries, different position sizes, but because he had a smaller account, of course my position size was higher, but in relatively we had the same size, same time of entry, same time of closure, same percentage in profit, and I lost the accounts because of that. So I was like, really? And I was not aware of that. I thought copy trading meaning if you have a signal service or something and you copy those trades and use those, for example, that would be copying a trade from someone else. But an EA apparently is also considered copying trades if someone uses the same EA within my Forex funds. It will get flagged and you will lose your accounts because of it. And because of that fact, like I said, I don't want to be selfish. I would love to give it out. Trust me. All I want to do here is journal my Forex story, basically, my journey. Just this channel is all about my journey in Forex, and help other people along the way as much as I can that are maybe on the same level or with me or lower, that I can help out to get to a level where they can actually have funded accounts and have success and get payouts and whatnot and build their own accounts. I love doing that. I love nothing more than that. I'm not even charging for that. But again, I have to be selfish with EA, because if I'm not and somebody else is using that for prop firms and happen to be on the same prop firm, then all that work was for nothing, basically. And I'm gonna lose the accounts again, and then I'm starting over from zero. So obviously I don't want to do that. So it's not purely selfish. It is selfish in a way, but I have to be, because I put all this work into this EA. I mean, we're working on this EA since last year September now, and this is like the 4th iteration of it, I think, and there's going to be a complete rewrite. So I'm very excited about the update. Hopefully within the next few days I will get it in my hands, and then I will test it out on a demo account just to make sure that it does everything the way I want it to do. And if that works out, well, then that goes on my funded account challenge instead of the old version that I have running on it now. I'm not even trading manually, so on my funded account or my funded account challenge, I use it on 6 pairs. Don't need that. It's using the same strategy, and at 0.01, I mean there's one accident with 0.02, but it was before I changed the settings, but all trades are at 0.01 unless it is a recovery trade. So actually let's go in there. It's a good example. Euro USD. So it's kind of like the same principle that I just explained. We have the first trade here. It has a different entry method, and then it has the second trade here. So we're 2 trades down now. Once the A hits 6 trades, it will use a stop loss. But usually you are out of the recovery trades before the 6th trade, so it's very rarely that it happens. And I picked 6 pairs that run on a demo account for a year now that have a combined max drawdown of 4.1%. If I use 0.01, I have a max daily drawdown of 5%. So theoretically, even if all of them go into max drawdown at the same time, which will probably never ever happen, I should still be below 5%. That's based on a demo account that we have running for over a year now with that same EA, and the max drawdown of each pair, and that's how I picked them. And they should combined not be over 5%. And you can see at the moment it's a 10K account. I'm at 37.12% drawdown, and that's the highest we had so far is actually that amount with 0.37% drawdown. So I'm way from the 5% that I'm allowed to. It is a slower way because it uses the minimum or the max order you can use before hitting max drawdown in the worst case scenario. And again, it will probably never ever happen, but that way I feel better about letting it just run. So, and you can see six of those are traded at the same time, same principles. It manages to trade differently than what I do manually, which is easier to do with a bot. And you can see it also increases the lot size, so it doesn't stay at the same one, it increases it. But since this account is much lower in capital, it's only $500, and I know it's only a demo account, but if I want to trade, I want to trade and be as realistic as I can. So I'm not increasing the lot size on this one. And you have the same option on the EA as well, but it's from experience, it's better to increase the lot size as you know, and then bring your average down, and then get out of those recovery trades as soon as possible. There's a hint for you how it works. But anyway, and that EA, like I said, I will not give out at all. There's no way, and this is not because I'm selfish, it's because I have to protect that software, because you know, if I give it out, I can't use it for prop firms anymore, and all that work was for nothing basically. And we're talking about a year of work at this point. So changes that we did with the update, just so you know, we actually included the dots, because before you get a significant dot, there's no reason to take a trade. So in this case, that was you know, in this case it would be the weekly dot, and if I go on the weekly dot here, just so you see what I mean, so we would not even have a trade here. The last weekly dot was actually down here, and we would still be in that trade, even though we're going through a pullback right now. But then my expectation is that it goes higher, and that's why I took that sell, and the A would stay in the trade until we actually hit the weekly dot on the other side. So if I go back here, just so you get an idea, so here we had the weekly dots, and it would have taken a trade, and here we hit the other side of the band. It would have not closed with the new EA version. It would have not closed here. It would have not closed here. It would have not closed here. It would have not added here. It would have not closed here. It just follows and follows and follows. Those are old dots again, so don't confuse those. They have to be fresh dots. And it still goes down, and it still goes down. We're talking well over a month now. Let me check. Yeah, so this is 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks, 8 weeks, 9 weeks, 10 weeks, 11 weeks. 12 weeks later we get the golden dots. And don't get me wrong, they might have came in earlier because they repaint, so they might have been here or maybe even up here already. But then we just do recovery trades. That's it. And like I said, I have a different management system with EA, so it makes it handles those differently. So we would always have hopefully just one open order at a time. We have briefly recovery trades and then back to one order. But anyway, so that's one of the updates. We also included that bottom indicator here, or both of them, to confirm entries. So for example, let me zoom in here. The A now as it is would have taken this as an entry, which that's a bad example. Let me see if I find a better one. I'm sorry. That's not good. That's a good example. So here, DA would have taken an entry here, possibly even here. But now it actually takes those into consideration with the update and would have taken the first entry here or here. So that would have actually let the trade run here. So all small little updates, and it's a complete rewrite, so it should be a lot faster. Also backtest should be faster, which is nice. And yeah, that's basically what it is based on. Like I said, I'm not gonna give away details because there's a lot of little finicky tricks built in that I came up with that I'm not gonna give out here. But that should hopefully improve the profitability of the EA by a lot. So, and I'm just trading the simple version manually on that demo account. And like I said, I just traded so this is Friday, Thursday. I think I got into the first trade up here actually somewhere. Yeah. So I didn't even get into a trade here. I took the first trade here and then another one the next day and then closed it out on Friday. Oh, on Thursday actually. And then added on Friday, and that's where I'm at right now. So it was just 2 days and I'm already back at 5 or 7 and just one pair. Because I don't want to do more than that. Okay, yeah, like I said, my plans changed a little bit. My funded FX had a 15% promo going, so I got the challenge 15% off, and I think I get a 115% refund instead of 100%. So I was like, you know what, I gotta jump back into the game at some point anyway. It's no time limit. My funded FX is also using a third-party broker, so I looked for that because that was a big issue with my forex. My funded FX, my forex funds. Anyway, the one that closed down now, my forex funds, I think it was. They used actually their own broker, and because of that, they were actually able to manipulate the trades of the traders that were actually profitable, because they had no trade backup with their own capital. So their only income was basically failing traders. So when somebody was too profitable, they manipulated that person's trades to the point where they lost the account, and that was their business model. Great. And I did notice that slippage. That's what they used, mostly slippage. I did notice it, but it was not that bad because I was using a 15-minute time frame. So a little bit of slippage, a few pips here and there, did not really affect my strategy that much. But if someone is trading on a lower time frame, you know, that can cost you a stop loss. Yeah, it's really bad. And so since then, I did some research, and people basically, or a lot of people say the same thing: make sure that you have a prop firm that uses a third-party broker, which they cannot manipulate. And my funded FX is using 8cap, which is an Australian broker, which is also used by many other prop firms as well. So there's less chance of a manipulation going on, if that makes sense. Even though at this point I'm not putting anything past them, any prop firm. I even heard bad things about FTMO. Once you dig into this, is a rabbit hole. That was my first thought. Well, I'm just going to use FTMO. They're the longest in the game. They always pay out. They're in a different regulatory country, so they cannot be shut down by the SEC or FSEC or whatever that institution was that shut my forex funds down. But then I heard an interview where they also are very trigger happy when it comes to banning accounts for the most stupid reasons, basically. Forgot the name of the guy. He was from Romania. He was on a podcast with what's his name? Words of Wisdom. I like the guy and his podcast. He's a very pleasant guy, and the podcasts are very enjoyable. And he was on one of the podcasts. Like I said, I forgot the name, but he was from Romania. And as soon as he had maxed out accounts and made ridiculous amounts of money, I think he had like a 6-figure month in profits, 6 figures on a max 400,000 allocation of funds. So that's more than 25% in a month, which is crazy. It's doable, but it's crazy. Anyway, they started giving him crap, basically, until he finally found a reason to ban his account, and he got banned from FTMO. So apparently FTMO is doing the same thing, more subtle, but still, which was a little disappointing. So I was like, okay. So I stayed with my funded FX, because at this point it doesn't really matter. All you have to hope for is that you pass the challenge, get your refund, get a little bit of profit out to break even, and then every month you do get a payout, you make money. As bad as that sounds, but you can't trust anyone anymore. I heard really bad things about Blue Guardian. I heard really bad things about what was the other one? Can't think of it, but there's 3-4 other ones that I heard bad things about from professional traders, not amateurs like me, like people that actually know what they're doing and make a lot of money. Anyway, so in my opinion, you can't really trust any prop firm right now. If you can't even trust FTMO, I mean, come on. And my forex funds, which was one of the biggest ones, I think they were even bigger as FTMO in the end, and you can't trust those, then I mean, who can you trust? All you can do is keep doing the challenges, get the accounts, get payouts, and try to break even as soon as you can, and go risk-free. Risk-free is first payout plus refund money. You're great. At this point, you're risk-free. So if you lose the account after that, well, at least you're risk-free and you didn't lose any money. But it's still, I mean, I feel bad for all those people that had like payouts pending, some of them 6-figure payouts, and they probably won't never see the money. This is all a big scam. Anywho, like I said, I started the my Funded FX 10K challenge, which was 15% off, so I paid $85 for that. And I just started that on Friday. I figured if I get the 10K, it's not too much money. My goal is obviously to pass the challenge and then get a payout and get the refund, so I can go risk-free, and then use those payouts to have put it in my own account, and half put it in new challenges. I said that wrong. What I mean is, let's say I have a 10K account, I get 5% payout, which is $500. Then minus the profit split and everything, let's say 400. Then I would take 200 and put it in my own account, and put the EA on, and put 200 in new challenges. And that's the way I want to build it up from now going forward. And then when I maxed out one prop firm, go to the next one, or actually maybe even split it between different prop firms and then start maxing them out as I hopefully keep my accounts, kind of like of testing the waters. And if I get banned on a smaller account because I'm making money, well, then I want to find out before I max out the account. So probably what I'm going to do is do like 100K on each prop firm first, before I even think about maxing out, and then see how it goes. And then if they are consistently pay out, and I'm not getting any weird emails or restrictions or whatever, or shadow banned, then I can start maxing those out, which again could happen at that point, but at least I'm getting payouts at this point. So this is my plan going forward. And yeah, that's where I'm at. And the reason why I decided to do it that way, I wanted to start with a $100 live account and trade that, and then use the profits from that account to actually start the first challenge. However, I had a problem with Oanda accepting my deposit because it came from a business account. And they're like, whoa, that's not your name on the account. I'm like, it is my business. And they wouldn't accept it. And I don't have a private account right now. So I was like, okay. And if anything, if I have my own account, I want to have it on a regulated broker, which is in the US, either forex.com or oanda.com. And I really do not like forex.com. So I decided on oanda.com. And for that, I have to have my own personal bank account, which I don't have at the moment. So I was like, okay, well then I do it the other way around, and I use that $100 and actually start the first challenge, and I got that for 85, so I actually saved some money. And now I'm gonna use, if I pass, I'm gonna use that to finance my account then, and then just take an overseas broker again, one of those brokers, but they usually have like the one that I want to use is LQDFX, which is the one that I use for my demo account right now. You can see this here, but they have a $500 minimum, and there's another one, Henko Trade, but the account that I would like on Henko Trade has a $1,000 minimum, which is the ECN Pro, I think. I don't like their lower tier account, so either way I need 500 or $1,000 for each of those brokers, and I don't have that right now, so I have to do it the other way around. So I'm gonna start the challenges now, hopefully pass the 10K challenge, use the payouts for that to fund new challenges and save some money. And once I have the 500 or $1,000 put away, then I'm gonna start my own live account again, real money account. Yeah, exactly. That's what that Romanian trader actually said in the podcast with Riz. That is what he's doing right now. He's only getting 100K accounts with each prop firm, and then he's only shooting for like 2-3% on each one of them per month, and that's it. That way he's not sticking out like a sore thumb because he just made 30% profit in 1 month. Because those are the people they go after right away, because they really cut into their profit margin. If you only make 2-3%, then you're like, yeah, whatever, it's not a big deal. And they probably have the money 10 times over to cover that. So you gotta stay basically under the radar. And that's why I think it's better to just get a 100K account with each prop firm, get that account, make 5% a month, leave it be. Make 5% on next account, leave it be. 5% on next account, leave it be, and so on. So you're not sticking out. And then if that, if you scale horizontally, then, as he said, horizontally, then let's say you have 100K accounts, you make 5%. That's on $1 million total. That's still $50,000 a month. and you're not losing any accounts because you're making too much money, if that makes sense. And the ultimate goal is anyway to build up your own account where you do not have restrictions, where they cannot take your account away for stupid reasons, and have enough funds in that private account where you're not depending on prop firms anymore. I think a lot of people, when they do prop firm trading, they don't even think about putting money away for their own account and building that one up. I mean, I know a lot of traders too, but there's also traders out there that don't. They're just relying on the prop firm payouts. Yeah, and what now? You had 600,000 with my Forex funds. Right now you gotta start over because you got nothing. So I'm gonna, from scratch, with each payout, put half away that goes into my own account, or towards my own account in the beginning, and the other half goes back into new challenges until I'm at 100K at each prop firm. And as soon as I get to 100K, I do the next prop firm, get a 100K challenge. As soon as I get that, do the next prop firm, get a 100K account. That's it. 100K, 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 100K. And every time I do get a payout, half of that goes back into my own account until I have that build up to, I don't know, 500,000, million, whatever. And at that point, you do not rely on prop firms anymore. You have no drawdown limit. You know, one day stupid move and you lose the account. It's not going to happen. And then I can still run my EA on it on lower risk. You know, if I just make 5% a month, that's great. And I don't mind a drawdown of 10-15% in between. And I can tell you that the EA with 10% drawdown, meaning adjusted risk, so you have about 10% on average, makes about 20% a month. And I'm perfectly fine with 10% drawdown if I make 20% a month. Now 20% on 500K, yeah, that's 100K a month. That's more than enough to pay for all your bills and have a good life. That's all you really need. But you can only do that with your own account. Prop firm accounts, you can't do that. So keep that in mind if you're like one of those people who's like, oh, I'm definitely going to do the prop firm thing, and then that's a good thing. Again, I totally support that, but keep in mind to build up your own account in the process. So put some money away from each payout, put it in your own account. Even if it's small in the beginning, it's fine. Put it in your own account, or put it on the side if you don't have enough for your own account because you're under the minimum. Just save that up, and then when you have enough, open up your own account, copy the trades to your own account, that's fine, and then build that account up as well as you trade the prop firm accounts. And then every time you get another payout, you take 50% of the payout and put it in your own account, build it up, build it up, build it up, build it up. Now all of a sudden you're at 5,000, all of a sudden you're at 50K, now you're at 100K, now you're at 250, now you're at 500, now you're at 1 million. And then let's say all the prop firms get taken away at that point. If you have 1 million in your own account in funds, you know, and let's say you only make 10% a month, that's $100,000 a month. That's a lot of money. You know, if you just take out what you need, leave the rest in there to basically compound, you're done. You can retire. Okay, yeah, I think that's it. If there's no more questions, thanks for being here, Foss. Appreciate it. My #1 fan. No, it's always a pleasure to see you. And again, I will not live trade anymore, but I gave you everything that you need. I mean, I did a few live sessions. I gave you the rundown on how it works, so you should be able to do it. It's really it's not that hard. And I would appreciate if you give me some feedback. On some nights I might even trade it myself again on the 1 minute just to test it out. But I think this is a great strategy where you can make a lot of percentages in a very short amount of time. So I'm still looking into it. I'm gonna possibly do a couple of sessions here and there where I trade it myself just to see, because I have a demo account anyway. You know, give it a shot, and then if it works, I might even use that on the funded account challenge just to speed up the process a little bit. You know, if I can make 3% here and there real quick, to add to the profit or towards the profit target, you know, I might be able to swing that whole challenge within a couple of weeks. So that's how much I like that strategy that I gave you guys. So, and again, I mentioned that before, but please take this to heart. Watch videos about ICT's Tudor swing and the fair value gap and the silver bullet strategy. Those three. Watch as many videos as you have to understand the principles or the loose principles that I use in my strategy. Like I said, I do not care about daily bias at all. For me, all I'm looking for is, are we taking the Asian low or are we taking the Asian high? That's it. And then I wait for market structure shift or a signal from my strategy, and I'm in that trade. And my TP2, TP1 is always 1 to 3 on half. TP2 is always the other side of Asian session, and then I let it run out. What I mean by let it run out is, once we hit it, let me show this again. So here's the Asian low, and this one did not work out. We actually exited a little bit and made still good profit on it. We do not take this trade up because we're still in the Asian session range, so we do not take this trade, and we're also not below the TMA. And then we wait, and here we get dots again, so we can actually take a trade here. My entry, this was probably not green at that point, but at this point we were on this candle, so my entry would have been here. You actually did not have a fair value gap. They actually had one here, but this is not a break of structure, is it? This is only one. Oh, it is actually 3. So this was a valid low. Yes, this was a break of structure. So you would have gotten an entry here with your stop loss above here if you used ICT. If you use my entry, you would have already been in the trade here, and then boom, off you go. And again, target is always Asian session, other side of the Asian session, which we hit here. And then what I do personally, I mean, you can close the trade here. This is a monster trade either way. However, I look at the second indicator, not necessarily a third one because it takes time to catch up, but I look on the second one, and as soon as I see white, I close the trade. So in this case, probably around here. So that would have been my exit, which is still a good amount more than just the low of the Asian session. That's another 11.4 pips on top. Unless you're done and you're tired and you want to close it down, by all means, anything below the Asian session is valid as a target, where you can close it and feel good about it. Yeah, that's it. It's very simple. So in this case, on Euro USD, we break above the Asian high right on the beginning of the session. We get a market structure shift right here. We get an entry with my strategy here, but we do get a fair value gap, which we never go back to. So in this case, my entry was the only valid entry actually. But yeah, you take this here and then target the low of the Asia session. 1 to 3 is reached right away, stop loss to break even, and then somewhere around here you close the trade because you got a reversal signal here. That's it. So don't think it's guaranteed that it will hit the other side. You do not take the trade up because you're in the middle of the range, of the Asian range, so we do not take trades from there. You just close it and then you wait what happens. And then in this case, you can see we go back up and we close higher. So that's another valid short, and you just wait. Whatever comes first, you watch market structure. Let me zoom in a little bit. So price comes out here. This was our last low, last high, and we do not breach any of those until here. But there was no fair value gap at this point anyway. We looked at that earlier. So you wait, and then we go higher again, create a higher low again, and then we break market structure here again, and here was a fair value gap. So here was an ICT entry, which would actually be better than my entry in this case because the stop loss was way lower. And then off you go. Or if you take my entry, like I said, you just again watch those two. When they turn white, then you pay attention. When do we get a red bar? Here we get a red bar, but again, this was white, this was not at this point. I can guarantee you that. So if the first red bar basically is not confirmed, you wait for the next new fresh red bar. So you wait and until this turns green again. When it turns green again, and then you get a new red bar here, and you look down and now it is valid, then you enter, which was on this candle. That's it. You don't even need the arrows anymore, or the fractals. Actually, let's take this all off because you really don't need it anymore. Makes the chart cleaner and it's less confusing for you. So this is all you need right here. So price comes higher. As soon as it goes above the high, now you pay attention to those two. And here you get a red bar. They're both green. So you wait for it to turn green again and give you a new fresh red bar. Here you get a new red bar, but this was still green at this point. So you ignore it again. You wait for it to turn green again, which it does here. And you get a new fresh red bar. And now they're both white for sure. Even crossed over already. Which again probably happened on this candle, to be fair. So that's where you enter. This is your entry with my system. You put a stop loss above the dots and then off you go. Plays around a little bit, but it starts going down. That's your trade. That would be a second trade. Or you wait for the ICT entry. And ICT entry again, you gotta keep on a track. Where was your last high and where was your last low? So your last low was here. Your last high was here. Now you wait for either one to get broken. We're still in this range. We're ranging. We're ranging. This is not a break. It was just a wick. Actually it was, because this needs to be a little bit higher. My bad. No, it was not a break. So yeah, in this case you wouldn't have had a valid ICT entry until down here somewhere, because it never goes above the high and it never goes below the low until here. That was your market structure shift. This was not a market structure shift because we don't close below. This was a market structure shift. And then as you can see, it never comes back here. Yes, there's a fair value gap, but nothing happens. So with ICT, you would have missed this trade. However, if you use my method, like I said, as soon as we take out that high again, we look on the bottom indicators. Every time we get a red bar, we look down. And again, this looks good now, but it was not in place. This was definitely green when we got that red bar. So this would have not been a valid entry signal. So whenever you get that red bar and it's not valid, you have to wait for new fresh red bars, meaning you gotta wait for it to turn green again, which it does here, and then wait for a new red bar, which happens here. Now we're white and actually already crossed over, and we're white here and already crossed over. Now it's a valid entry. And again, to be fair, let's probably repaint it a little bit. So you got the bar here on the close of this candle here, and that's your entry candle. Now we're valid. So you enter, stop loss above here, and then you're off. Works every time. And same here. We did not go back to the extreme fair value gap. So if you use ICT's model, you would have not gotten this entry. It never came back into the fair value gap. However, again, we take out the high right away. So as it takes us out, we look down and we wait for the first indicator to give us a red bar. That's how I approach it. That's why it's first on the bottom. So I wait. Oh, red bar. Again, it's always on the second bar that it flips. So when we get this red bar, what do? I look down. Am I white here? Am I white here? Yes, I am. This is a valid entry. So I enter. Stop loss above the dots, which we have, and then let it go. And you can see, worked out beautifully. It's very simple. And then it's just about trade management. Like I said, half of the trade at 1 to 3, and then you can move your stop loss to break even. And you already banked 1.5%. So even if you get stopped out on the second half, you made a good profit for the day. 1.5% is nothing to laugh at. But in this case, it never comes back, and it goes lower and lower and lower and lower, and then it does not hit the Asian low. But we do get a reversal signal right here, right around here. So I close the trade. This is not an entry for me. I just close the trade. Something is not right. And in this case, you know, the not right thing comes in form of price even taking out the high again, which is fine. But now we have possibly a new trade setup. So as soon as this breaches, I wait for a sell signal on the first one. We get the first one here. Not valid. So I leave it alone. I wait for them to turn green again. Give me a new fresh red bar right here. Again, this was green, so not valid for me. So I wait. We turn green again. We get a new fresh red bar here. Boom. This is valid. So here's my entry. Stop loss above, and off we go. Simple as that. You would have had a murder Friday with Euro USD, because there was a 1 to 3 and a 1 to 9, I think. So that would have been 1.5 and 4.5, so that would have been 6%. And then if you enter here on this candle, that's 3.4 stop loss, and then even if you just get out here, that's 34. That's a 1 to 10. So another 1.5%, and then 5%. So 6.5 and 4.5. So that would be 11% on the day. No, it's nothing to laugh at. 11%. That's pretty much the challenge in one day. With not over leveraging and using risk management and everything and trade management. It's perfect. So again, I love this strategy, and I'm definitely going to follow it, because on the 15-minute, again, you wait forever for something to happen. So I might trade it here and there, but I'm not going to do it live anymore. You got everything you need for that. I did a couple of live sessions, unfortunately not so successful because I picked the worst days, but you're going to have those too. And again, what I do, if I have 2 losses in a row, I walk away. That is 2% down on a day, I'm done. I walk away. I come back the next day. Live to trade another day, basically. Especially when you're in a challenge for a funded account. You know, so your max drawdown will never be more than 2%. So the moment you lose 2 trades, you're out. You take a break, you wait until the next day. Because they're gonna be shitty days too, like again Thursday, which I could have avoided if I would have read the economic calendar, which I did not until it actually started. So I had right out of bed, I think I had 2 losses, and then I was like, okay, I'm done. I walked away. And that was it. Also, I was really tired that day for some reason. But anyway, you get those days too. They suck. Well, let's look on this day. Yeah, here, perfect. We come out. We get an entry right here. Even if it's here, you get a 1, 2, 3. Your stop loss is a break even. We did not take out the high. Oh, actually we did. By a few pips. So yeah, you could have closed your second half here, so that would have been a nice trade. Probably around 4%. I probably would have called it a day. 4% on a day is good. You can't always have a 10, 12% day, but dude, if you have 4% on a day, nothing wrong with that. You can walk away and feel good about yourself. And then we had a second setup right here. So right around here, probably on this candle. There's a huge stop loss, but let's see. I probably if you have this high of a spike outside of what I usually do, and I'm not making this up, I do not include the wicks on the top. So I would put my stop loss right here. So 8.6. So 24, 25.8. See if you get this. And not quite. We would have gotten it eventually, but yeah, again, you have a good trade here, and then a little bit of something if you, whatever your trade management is like, you would have gotten it here too. Here as well, we actually come out right away. Let's say we get an entry here, we take this 1 to 8, that's a 1 to 3 right there, stop loss to break even, price comes back, stops you out, goes lower, and then I think we had the next entry here or here. I think it was here. So you take that even if it's here, and so 4 pips, so you need 12 pips, which we don't get, and we get stopped out actually here. That's one loss. So again, we had 1 to 3 where we had 1.5% profit, then we had a 1% loss, so we're still up 0.5% over the day, and then we can re-enter right here. Well, here I never enter on a bearish candle if I go long. So stop loss below here, so that's 3.5 pips, and then again a monster trade out of this. It's like 100 and something pips, no, 50 something pips with a 3.5 pip stop loss. So that's 1 to 3 again, so now we're up 2%, and then I get, let's see where this goes. Can't really tell, but it would have been probably around here somewhere. So let's say here, let's say 50 pips. So 3.5, 50 pips, 50 divided by 3.5. So you would have had 1 to 14 on the second half, divided by 2, that's 7%, plus the 2%, that would have been 9% day, and we even had a loss in there. Still made 9% at the end of the day. So another great day here. Here, yeah, I can't see the indicators right now, but if you follow market structure, yeah, same thing again. We had a fair value gap here, but price never comes back. However, I bet that we had an entry here with my system. Unfortunately, you can't see that here. So you take this 3.2, 9.9, you get you 1 to 3, stop loss to break even, and then probably we got a turnaround here, you close the trade, done. That was a great trade right there. We never reached the high of the Asian session, but we get a 1 to 3 and then probably a 1 to 6. So that's 3%, 1.5, that's a 4 to 5% day as well. Great. Don't really need more than that. Here, not sure if you got a buy here, but let's say we did 2.3. We never reach 1 to 3, and we get stopped out, which is no problem. We take the next one, so we have 1% loss. Take the next entry, which is here. So now we have 1.7. So we definitely get a 1 to 3 out of that. And then we reach the other side here, and then somewhere here you probably would have exited. So that's another 5% day right here, with the loss. Like I said, 1 loss is fine. 2 losses in a row, I would probably walk away and call it a day. Oh, look at that. Similar setup that we had before. So, oh, that was actually. But, I mean, you get the gist of it. It works. There's bad days where it doesn't work as well. But again, if you manage it with a clear head and say, okay, I allow myself 2 losses. If I have 2 losses back to back, I'm out. If I only have 1, you just take the next entry, and that's usually the one that works out. If it doesn't, then there's some news involved or some other things going on. I would just walk away for the day, period, before you start revenge trading and whatnot. Just walk it off. And a bad day happens. Next day you make 10%, you're fine. It's not that big of a deal. Yeah, I don't know if there's anyone still here. Well, I'm talking to myself. Talking to myself. Okay, good. Then I guess there's no more questions. So I just want to say thanks for being here. Thanks for joining me. I went over the small changes in the existing 1-minute template with the Judas Swing and Silver Bullet. Again, watch the videos. I will not go into details about those. And what I use is only the Asian session high rate or Asian session low rate. That's all I use. I don't use daily buys or anything like that. There's a lot more to the Judas Swing, but I'm not using that for this strategy, and it works. Again, you have beautiful days where you make a really good profit. I think the highest we had from back testing was 17.5% in one day. If you would have done London and New York session, gotta preface that, which is probably never going to happen because it's just too long of a window. But even if you just do one trade in a London session, you should usually gain at least 4 to 5% if both trades work out. That's a good daily percentage. Again, that's like if you just do that 3 days, you pass the challenge, done. If you power through, you can pass it in 1 day on a good day easily. So if there are any questions, since there's no one here anymore, please leave them in the Telegram channel. The link for the Telegram channel is in the description of this video. Thanks for being here and joining me, for those people that stopped by. And yeah, join the Telegram channel. It's free. It doesn't cost anything. This template is available for download in there for free. Template and indicators, everything's in there. And if you have any questions, you can leave them in the Telegram channel, and I will get to it when I get to it. Until then, be safe, and see you all latest next Sunday for the next Q&A live session and updates and all the goodies. And if you have questions, you're more than welcome to participate next Sunday in the live Q&A and ask them live as well. That's fine with me. And again, I'm not a professional trader. I'm not a financial advisor. Just a regular dude trying to make his way in the Forex market and try to help other people out in the process with the ideas that I come up with. All those are my ideas. They might not be original and somebody else had them before. That's fine, but those are my ideas that I came up with, and I'm freely sharing them with you. Okay. That's it. You all have a great rest of your weekend, and let's make some money next week. And I see you next weekend. Bye.